Get Rich Education is brought to you by Norada Real Estate and Ridge Lending Group.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, episode 76. I'm your host, Keith Weinhold. Now heard in 158 world nations, it's the show where I'm back to help you build durable, passive streams of wealth for yourself. You know, when you invest in real estate in the way that we talk about here at GRE, you are hedged in so many ways. As Russell Gray said on the latest Investor Summit at Sea, look, historically, people pay 30% of their income to live somewhere. Now, even if there is significant economic calamity coming, which some believe, all right, even if that happens, people are still going to use some medium of exchange, even if it isn't the US dollar. Yes, so even if a financial crisis relegates our currency to where society is transacting in seashells or tulips or wooden nickels, okay, if that's what has value, well, hey, it's not any more strange than trading green paper with dead presidents on it. People are still going to pay you 30% of that medium exchange, 30% of their income, regardless of that medium of exchange, in order to live somewhere. So no wonder that income real estate is so historically proven as the number one wealth building investment over time, and that's in good times and in bad times. And the demographics of the next 10 years have more people choosing to rent, and it looks even better for those of us whom are building wealth with income property. Well, I'm glad you're here with me today. I've gone through my personal notes that I took while attending the recent Real Estate Guys Investor Summit at Sea, a 10-day or so combination investing conference / Caribbean cruise that originated and ended in Miami, Florida earlier this month. I gave you some takeaways on the last episode, but there were just so many knowledge bombs dropped on the summit that I've got more for you this week. Now, there were a lot of prominent investors on board our floating conference room, which was one small part of the giant ship, including probably the best-known investor, Robert Kiyosaki, and today I'm going to talk more about what it's like to be around him. Now, each night for dinner, all of us summiteers, a summiteer is what you're known as when you attend the Investor Summit at Sea, okay, we all kind of sit in the same area of this big, grand, very nicely decorated with high ceilings dining room on the ship. There are assigned seats at the table that kind of rotate around so that summiteers can meet each other and meet the faculty. The first night at dinner, I began to get a better picture of the international flavor of the event as the person seated to my left was from Uruguay and to my right was a couple from Papua New Guinea. And they probably found it equally expansionary that the summiteer badge that I wore says that I'm from Alaska. Okay, so this was truly an international in real estate investing event here. And I don't know how many nations the attendees were from. It was certainly dominated by United States summiteers, though. And by the way, for me, it was a 9.5-hour flight to get from Anchorage, Alaska to Miami, Florida. That's a flight from Anchorage to Los Angeles and then a layover and then LA straight to Miami. And I'm not including that layover in the 9.5 hours. Okay, that's 9.5 hours flight time. And, you know, I was thinking, how many places in the world can you fly on a large jet for 9.5 hours and yet you haven't even left the country? You end up in the same country that you started in. So getting back to the summit here, Ross McAllister, he iterated that affordability is going to be a problem for future renters. Pretty bad news for renters and generally good news for income property owners like us. Ross remarked that the cost of construction is up. The cost of land is up. Labor costs are up. And even though energy prices are down, all that is true. Despite all of that, people need housing. We need to continue to meet that demand. For example, there are 60,000 units planned to be built in Houston right now. That's planned to be built, at least. Try to meet that need. The population of the United States is increasing by about 2.5 million people every year, and they're all going to need to live somewhere. You are in a great position to be a profiteer if you provide them with responsible housing in population and job growth markets with sound management where the rent income exceeds your expenses from day one when you buy the property. Even if the economy falls apart, people are going to need to live somewhere and pay you 30% of their income, even if it's in seashells. In a recession or a depression, people might not buy so many hot tubs, nor RVs, nor Mercedes-Benz S-Class sedans, nor fresh blueberries, nor even car gasoline, but they're all going to need to live somewhere. Now, Robert Kiyosaki is a big name, and he was a big figure here on the Investor Summit at Sea. He knows that writing the book Rich Dad Poor Dad, which I read around 2001, that it changed the way that I think, and he knows that it inspired me to buy an Anchorage, Alaska fourplex building in 2002 and build from there. And if you haven't read his book, Rich Dad Poor Dad, it's one book that you need to read. I almost don't need to say that, but I bet there's someone here listening that hasn't read it, though you probably already have. Now, on the Investor Summit at Sea, at one point, everyone that has read Rich Dad Poor Dad was asked to stand up, and 80-some%, if not 90-some% of summiteers stood up. Just an incredibly influential book. I had a little chat, just Robert Kiyosaki and I, at breakfast time. Later in the summit, he gave a presentation called The Rich Don't Work for Money. And those are basically the first, the first 6 words of the book, Rich Dad Poor Dad. Those words being, the rich don't work for money. Passive income generating activities like real estate investing are often taxed the least. You want to get all the good debt that you can, etc. Robert Kiyosaki, he said that I'm not a real estate guy, but I own a lot of real estate, and he's made it quite well known that he's an investor in MC Company's real estate deals, Ken McElroy and Ross McAllister's company. And he uses some, colorful language to dress up his presentation. There was some discussion from Kiyosaki about a concept that he and his Rich Dad company helped popularize called the cone of learning, which I've discussed a little bit before. For the cone of learning, picture an inverted pyramid. At the bottom, where the pyramid is the narrowest, that's where you learn the least, and the word reading is down there at the bottom, as we only retain 10% of what we read 2 weeks later. As you move up the cone of learning, above reading is hearing words, and we tend to remember 20% of what we hear. So we retain twice as much from hearing words as we do from reading words. And I like that because podcast consumption is hearing words. With hearing words, you get my voice tone and inflection and some things to help enhance your understanding that you don't get with reading. I'm not going to go over all 12 hierarchies on the cone of learning, but as you advance up the cone, you retain 50% of watching a demonstration on location, sort of like we were doing on the summit, 70% by participating in a discussion, and then moving all the way up to the top at 90% retention. You retain 90% if you do the real thing yourself. There is no 100% retention. Now, within Robert Kiyosaki's presentation, he gave us short discussion breaks specifically to stay seated in our chairs, turn to the person next to us, and discuss what we just learned. See, by doing that, Kiyosaki moved us up the cone of learning so that we got to that 70% retention level because he just got us participating in a little discussion before we went back and resumed. The school system generally keeps us in the bottom 20% of the cone of learning. Now, Kiyosaki also happened to mention at one point that he feels sorry for the summiteers seated with him at dinner because he doesn't know everything. Kiyosaki said that he doesn't answer the "what should I do" question, but rather he answers the "who should I be" question, Not what should I do, but rather who should I be. Now, another night, Kiyosaki also hosted an article study. That's where us attendees, us summiteers, had an opportunity to study 2 Kiyosaki-chosen articles that were handed out to us a few days earlier and then show up for the article study already having them read. And, when attendees showed up to the article study, they often wanted to give their personal slant on the material that they had read. One of the articles of which was a well-written Jim Rickards article about gold. Attendees kind of wanted to pass the information from the article through their personal mental filter and basically bring in their own biases into what their takeaways were. And I admit I wanted to do that too. Kiyosaki taught us to really get our minds into what the author is writing about, even if you don't quite agree with it, okay? So try to suspend your personal biases when you read. Buy into the writer's viewpoint, and you will come away understanding material better when your preconceptions are not factored in, okay? So that was the takeaway there. For example, in the one article for the article study, Jim Rickards wrote that gold is not an investment, okay? I know that's a popular thing to say and write, but to me, I think you can make the case that gold is an investment, okay? Sure, gold is a store of value. Sure, gold is like money insurance. But, go look up the definition of the word investment at Investopedia, and I think that you can make the case that gold is an investment, okay? But Kiyosaki's point is that while you read, you need to eliminate your personal slant and really buy into what the author is writing, okay? It's kind of like how Kiyosaki says that every coin has 3 sides. Every coin has 3 sides. There are heads, there are tails, and then there is the edge. The edge is right where you want to be, because when you're on the edge of the coin, that's when you can see both sides of the coin. When you're on the edge, only then can you see both sides and make better investment decisions, all right? Now, with Get Rich Education, I feel like I'm on the edge of the coin, or at least that's where I try to be. All right, because, really, look, passive real estate investing, that's basically a niche, and that's away from the mainstream, okay? But see, I consume mainstream media, too, on avenues like CNN Money or Bloomberg or CNBC or an outlet like the Wall Street Journal, because I want to know how other people are thinking, okay? When I know how the masses think and what they're paying attention to and what they're concerned about and what their fears are, then I can see both sides of the coin, because now I'm on the edge, all right? So, and hey, these are my words now, not Kiyosaki's. Okay, it's healthy to read an opposing viewpoint and see how other people are thinking. Understanding something well means seeing that same thing through different lenses and through different angles. And what I want to say is, if you only read what you already believe in, then you're consuming content for affirmation, okay? But if you read both what you believe in and an opposing viewpoint, you're in it for information. Okay, do you want mere affirmation or information? Okay, wouldn't you rather have information? All right, so don't only be affirmed, be informed. All right, I can serve more people when I know how most people are thinking, and so can you. Get on the edge of the coin so that you can see both sides. Be informed, not affirmed. All right, we'll be right back. I'm your host, Keith Weinhold. This is Get Rich Education. Cash flow real estate investors, this is Get Rich Education's Keith Weinhold. Did you know that you can finance up to 35 income properties, all with one lender? Ridge Lending Group specializes in investment property loans, and they do it in almost every U.S. state. Ridge has worked with tens of thousands of real estate investors and homeowners all over the country. They've been doing this for investors for so long that at this point, they've helped more families realize their dreams of becoming real estate investors than any other mortgage lender in the country. To find out more, visit ridgelendinggroup.com.
Are you looking for a roadmap to financial freedom? If so, we have a solution for you. Norada Real Estate is offering a limited number of free strategy sessions to help you get out of the rat race. Learn how you can create wealth and build monthly passive income. To set up a time with one of our knowledgeable investment counselors, simply go to noradarealestate.com. That's NORADA realestate.com.
Hi, this is Tom Hopkins, and I can't tell you how smart you are to be with Get Rich Education and make these ideas you.
Welcome back to Get Rich Education. I'm discussing some of my top takeaways from the Real Estate Guys Investor Summit at Sea cruise that concluded earlier this month. You know, something that I did on the cruise that a lot of people would consider just crazy, or I guess it's more like what I refrained from doing for over a week that many people would consider crazy. I did not check the internet or email or texts once in a period of over a week. Access was cut off, okay? There was a hoop or two to have to jump in order to check the internet while at sea, so I didn't do it. I just immersed myself in the content, in the moment, in the learning, in the beachcombing, and the networking with other summiteers, okay? Now, I guess during that week, I did wonder a little bit what was going on in my email inbox and some other places, but, you know, I've set up the kind of life where I just didn't have to absolutely to check on that stuff, okay? Now, other attendees there, summiteers, were even a little surprised and envious that I was able to do this. And when we did get back to Miami a week later, I checked it right away, and I did have a few things to catch up on. But, you know, I've set up my life so that I can detach if I want to, okay? Busyness is a choice. Busyness is a choice. Stress is a choice. Happiness is a choice. Sometimes we get so busy being a human doing that we forget to be a human being. Yes, you ever heard that? We get so busy being a human doing that we forget to be a human being. So, I mean, sheesh, today it's easier than ever to inexpensively outsource your daily grind tasks to others at freelance sites like Fiverr.com, Upwork.com, HireMyMom.com, okay? It's lifestyle arbitrage. You know, you really have more choice in the matter than ever. So the Summit at Sea, it was a perfect vehicle to detach from the daily grind. And you know what else it gave me the opportunity to do? It's have networking conversations where I tried to put myself in a position so that I could be the worst investor in the room, okay? That's right. I don't get too many opportunities to do that. If I can show myself to be vulnerable and get together with big brains that have a greater mastery of a certain subject matter than me, then I have a shot at making myself the worst investor in the room, okay? If you could make yourself the worst investor in the room, I mean, think about how much you can learn from every other investor in the room, okay? That's the kind of networking I want to do. Now, speaking of big brains, last week I told you that how on the summit, Jim Rickards predicted that the Fed would raise interest rates in both March and June. All right. Well, last week the Fed met and stood pat. Okay. They didn't raise rates at their March meeting. Now, you can say that Rickards was wrong, but, you know, there is another Fed meeting next month. I mean, if the Fed raises rates in both April and June instead of May and June or March and June, then really how wrong was Rickards, okay? There are 8 Fed meetings this year. So, you know, I don't often talk about every day-to-day, week-to-week, month-to-month market gyration here on GRE because this show exists so that you can build durable, sustainable wealth over time for yourself, especially through real estate, since that's the most historically proven investment vehicle, okay? It's not about timing the market. You know, I like to say it's not about timing the market, it's about time in the market, okay? It's not about timing the market, it's about time in the market. Now, on board the ship, there was a presentation about self-directed individual retirement accounts, self-directed IRAs. Some people have never heard of a self-directed IRA. Okay, you don't need to keep your IRA with some lame mutual fund company that has your IRA invested in stocks and bonds. Okay, stocks and bonds, they really don't beat inflation, the true rate of inflation, by very much at all over the long term. You've got little control in those vehicles. You've got really a little understanding of what your IRA is invested in that way. Plus, your returns are lousy with stocks and bonds, okay? Now, event host Robert Helms, he chimed in that a lot of investors, they show great care and concern for where their cash is invested, but that same investor cares relatively little about where their retirement funds are invested. Well, you should care, okay? With a self-directed IRA, and I have one of those as well that come from way back in the days when I used to contribute to an IRA. With a self-directed IRA, which you qualify for, you can invest in unimproved land. You can invest in single-family rental homes, apartment buildings, farmland, timberland. You can invest your IRA in partnerships, corporations, LLCs, gold, silver, platinum. You can even self-direct your IRA and invest in mortgage notes, okay? You can invest your IRA in tax liens. So have more choices, have more control, have your IRA in something that you can better understand and often get a better return for yourself that way too with a self-directed IRA, okay? I might have that presenter come onto the show here so that you can learn more about how to do that. Just about the only things that IRAs cannot be invested into are life insurance and collectibles. Now, globally renowned sales trainer Tom Hopkins gave a couple presentations. He did a stand-up comedy night one time too. Tom's got a lot of personality, and that's because sales is perhaps the most important business skill. A lot of times business, it really does come down to sales. When you're trying to rent your Class C 2-bedroom, 1-bathroom apartment unit to a prospective tenant, that is sales. If you're trying to get an investor to buy into your real estate syndication, that comes down to your sales skill. What Tom Hopkins says you need to do to be effective at sales is be a master asker. Be a master asker, okay? Why do you want to ask questions of whom you need to sell to? Well, number one, you want to gain control of the conversation by asking questions. And that is kind of opposite of what most people think, okay? You gain control by being the one that asks the questions. When I interview a guest on GRE, I'm in control because I'm the one asking the questions. Secondly, you want to be a master asker in order to isolate your clients' areas of interest, okay? Find out what they want. Thirdly, you want to uncover their hidden fears. And fourthly, you want to be a master asker in order to kind of get your client talking, okay? Because if you say something, your client might tend to doubt it. But if your client says something, well, then it's got to be true, okay? If they say it, it must be true. And then you can go along and agree with them. All right, when your client is agreeing with you, they tend to like and trust you, and it greatly increases the chances that you will make a sale, okay? So be a master asker. If you want to know how to sell anything and you want more of the world-renowned sales trainer Tom Hopkins, I had Tom here with me as I interviewed him for an entire show back in episode 12, and that was probably the most interesting show in, I guess, human nature that I've ever done. And I've also never laughed so much during an episode than I did in GRE episode 12 with Tom Hopkins. Learn how to sell anything. Now, there's one great opportunity in real estate where, I cannot believe that more people haven't invested in and that's even though the word has been out for quite some time. And this just seems like perhaps the smartest, most sustainable investment of the decade, perhaps, okay? It's an opportunity that I recognized years ago, and I have since begun investing in myself, and that is making a direct investment in farmland. Yeah, farmland, okay? Now, to some, farmland sounds so, I guess, basic and unsophisticated, but all right, consider this. Just try to get your mind wrapped around this. 200,000 people were born today. Yes, 200,000 people were born today, and they all have a mouth that needs to be fed, okay? And that's actually net world population growth there, okay? Births minus deaths. Now, take a sampling of the world's food palette and what the world eats today, and it took an additional 15,000 acres of the world's land just to feed the people that were born today, okay? Well, tomorrow, 200,000 more people will be born, and it's going to take another 15,000 of acres of land to feed them again tomorrow, okay? At the same time this is happening, the amount of the world's land that's ripe for agriculture is decreasing. Okay, so you've got increasing demand, rapidly increasing demand, and at the same time, you've got tightening supply as water shortages and weather disasters and loss of topsoil and more development by those extra 200,000 people every day constrain that supply. So farmland investing, it's just an enormous trend. And with a direct farmland investment, you've also got the personal benefit of having your own food to eat. So instead of tenants, you have crops, and the crops show up every day, and they know what to do. So some liken farmland investing to gold, okay? But farmland investing is a lot better because that way you receive a yield, a cash flow, and you don't have the volatility of gold. Now, if you invest in U.S. farmland, you've often got to deal with high land prices and excessive regulation. Now, on the Summit at Sea, investing in farmland in the South American nation of Uruguay was presented. There in Uruguay, it's often row crops like wheat, corn, and soy, but the minimum investment was several $100,000. Simon Black, a globally connected insider on the Summit, he invested in farmland in the South American nation of Chile. Now, if you want to invest quite a bit closer to North America, you can do exactly what I have and invest in a crop with sustainable demand. I mean, this crop is a near necessity to Americans, and you can invest in coffee farm parcels in Panama. You buy a half-acre parcel at a time, and the minimum investment is only $18,000, and it provides you with the cash flow from the annual coffee harvest. And you can even self-direct your IRA to invest in coffee farm parcels. To learn more about that and get a great free coffee farm investing report sent directly to you, just go to getricheducation.com/coffee. That's getricheducation.com/coffee. So at the Investor Summit at Sea, a fair share of my value was in the network that I built with the other summiteers, the other attendees. You really feel like you build a bond with real people in a short amount of time as you're really experiencing a lot of the best things with each other, a lot of the best things that life has to offer over the course of 9 days. So I was extremely grateful to get to go. By the middle of that week on the summit, you're thinking, gosh, this is a lot of content. By late in the week, you're starting to feel sad that it's almost over. And when we were all in the conference room on the last day, some people were crying, okay? Hey, please tell a friend or coworker about Get Rich Education. I'm here with a new show every Friday to help you build your wealth. Now go out there and don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.